Good morning, everyone, and welcome. Good night, everyone, and welcome to the Trade Academy. So let's get started today in trading with OC. Let's take a look at the volume indicators. So just so you know, guys, we're going to be dividing this chapter in two. I'm going to be just explaining what volume indicators do we have, and then also how we're going to be using them in a basic overall manner. Then we're going to be going into the advanced setup tomorrow on the next class. All right, so let's get it. Let's go and take a look at how everything is doing. JR, what's up, my friend? Starlink on socials. Be right back. Absolutely, my friend. So let's get it. Or sharing link on socials. Absolutely. Thank you, my friend. So let's get it. Let's go to the charts. As always, let's get started with a little bit of overview of what we're going to be looking at. How is the market looking? Let's go to our setup in here. Let's bring BTC and let's see where we're leaving out, where we were left out, right? We're also going to be looking at T from our setup. And this is where we were what we were expecting. All right, so look at that, maybe going for then a little reversal. We already have peak performance in here. Basically what we were expecting almost instantly. Slightly above. Come on, that was amazing. All right, and then we're forming a pattern. Let's just get rid of many lines that we have in here, extra lines that we're no longer going to be using. Let's see, maybe this is it. I don't want to start erasing stuff that I don't need to. Yeah, I think this is going to be it. Perfect. So we have the EMAs. We have many other stuff in here. Seems like we're following as we were expecting. Breakout, we're going for the retest, so we want to see a little bit of this downwards motion, right? And we're going to be trying to allocate somewhere within a support zone, right? So as you remember, and I just deleted it, we have the next support somewhere around here, and that's where we're going to be trying our next half of a position entry, right? Why is it half? Because, guys, let's be honest, this is all-time highs, right? So we're basically at all-time highs. Oh, but this is TAO. Oh man, all of these thinking that this was all-time highs of Bitcoin. Well, then TAO looking the same. This was fantastic. Let's go to Bitcoin. Perfect. All right, so Bitcoin, we also were expecting a little bit of a retracement. It's holding. Oh man, I really thought that we had that little retracement in there already playing out, but it seems like it's not. All right, so what's happening here? We were expecting this movement to the upside. All right, it is moving to the upside. Perfect. So let's just get rid of that. We have peak performance, but we're not seeing that retracement, right? So usually we see that we're retracing in here, right? And then maybe either the price of Bitcoin holds or retrace, right? So this is strength in our setup. So just so you know, it's been a couple of hours here. I don't see Bitcoin since the chart hacker setup. So it's been a little while now, right? So basically, I was expecting a little bit of a retracement. Did not play it out. It's still within the game. Just so you know, let's be real. This is exactly what I was trying to tell you before. We are on all-time highs. It's basically breaking all-time highs. So what happens last time that you long all-time highs? Well, then that did not play it out as great. We need to see a retracement, or at least I need to see a retracement or a flag or something that indicates me that I have the next chance. Maybe another flip of the ribbon there. Let's bring up, maybe, there we go. Maybe losing this area. Remember that we're following on this trend line on our oscillator, right? So maybe losing that trend line and then going for some support. I would say 55 EMA will be a great area for support. Dynamic reactor will be also another great area of support. I would also kind of like not go all the way to dynamic reactor. Why? Because look at the bullishness, how bullish we are on the markets. All right, let's talk volume, because we're just going to be giving the introduction today. It's going to be a very short class because tomorrow we're going to be going into how to use them. All right, so there are two main volume indicators. One of those, it is the regular volume. All right, let me just get rid of the EMAs just so we don't stuck on those. And then just 1 second. Perfect. All right, so let's go and add volume. All right, so this is the first volume, the volume that everybody has, right? So you add it. You can add it even if you don't have premium, and you can remember that in premium you can, well, sorry, in basic you can add up to 2 indicators, right? So you can add volume and 2 other indicators. Basically, this is telling you how much volume there was in a given candle, right? You're also going to be seeing a couple of different volume candles, right? For example, one of the most interesting ones are this kind of like volume. Why? Because every bullish volume, despite it was both buys and sells, but the bulls won, right? And you can confirm that not only by the green color, but also how that candle stopped at, right? Or ended up. And then everything was basically back in red. So there was a lot of bearish volume, and you can see that that candle was with a lot of absorption. This means that within this candle in here, it's not that there were just bears, right? Or just sells. No, it just says that between buys and sells, bears and bulls, well, that it ended up winning just slightly bit more the bearish scenario. All right, it doesn't actually need to close exactly red. Let's actually just turn off our linear regression tool. All right, and let's also turn off this one, and in this case it was red, but it doesn't need to be like a big bearish candle, right? So as you can see, just slightly bit red, and that indicates that we ended up closing below our opening section, but also that the bears won on that candle. All right, so let's go over a little bit more other things that we see on volume. Another important thing on volume, it is the overall reaction, right? I want to show you guys here that I'm zooming out and looking at the trend, right? 1 second, please. I do have a couple of things. And well, then let's take a look at what's going on in here. So we have the full trend going up at this point, and what happens in here, it is that we're gonna be looking for the actual trend scenario. All right, this is it. We can absolutely find out how the trend is moving. Look at that. We have a bullish trend. The next thing that we have, it is that we can create a channel. What else do we do here? Well, you guessed it. At this point, we are basically going at the top, right? So we are getting into high areas of this channel. And what we're doing here, it is that, well, last time, we have rejecting on those areas, right? But what does that have to do with volume? I want you guys to remember that I always tell you zoom out, zoom out, zoom out, right? So while zooming out in here, we can take a look at how is the overall scenario of volume playing out, right? Look at those highs. Look at how those high areas of volume are starting to decrease, all right? Oh, sorry for that. I just wanted to answer it here. And then, well, then, thank you for that pausing here. And then let's take a look at what's going on. So we're looking for where the trend started, right? And then we're looking on how the trend ends, right? So we don't know when the trend ends. Well, we can speculate that the trend is going to end when we have an ending pattern, right? It could be a double top, all right? It could be a loss of that trend line, right? It could be a lower high and then confirming with a lower low, right? In this case, this will be your short, all right? But we're not there yet. We need to wait for that to play out. Why? Because, I mean, let's be real. In the past, I mean, we had that same pattern, right? Let's take a look at what happened in this pattern here. So we were going upwards in here, all right? And then what happens? Well, then what happens here? We regain volume, right? Oh, come on, move out of the way. There we go. We regain volume, and we ended up breaking through. I want to also show you how since this part, which, yeah, it kind of like it is going downwards. We cannot deny this, right? But I would actually classify this as a range and not much as a trend because of the slope and how big it is, right? So based on that, let me just zoom out and let's see that we had decreasing volume all across, oh, come on, all across this section. And then what happens? Then we start having outstanding volume. What happens in that outstanding volume? Well, then let's actually zoom in a little bit here. And let's see that right here we have, where is the bottom? Right there, what's happening? We have a ginormous movement. That's why, remember, by strategy, we long the bottom, all right? I know we have decreasing volume. I know this is scary, right? But that's why we go long position. We set our stop loss below the previous low, give ourselves our wiggle room, and then we aim at previous highs for TP number 1, and then we strap in or strap on, whatever. All right, so basically that's what we're having, right? So, and then what happens, we have outstanding volume, then we keep pushing, and then we create those higher highs. And what is happening then with your volume? Well, then is just almost parallel, right? It's parallel right here. So let's take a look at what's going on. This is almost the same pattern, right? This is more like a just give me perfect. All right, this is more like a trend. All right, based on this trend, we need to look for what's going on. So we already have seen that we are reducing our volume in here, right? What could happen? Well, then at this point, are we long in the top? Of course not, right? Do we have outstanding volume in here? Not really, right? We still have decreasing volume. That's why I'm looking for a possible retracement in here, right? So look at that. This is playing out very nicely. This is the 4-hour Bitcoin, US dollar, and Bitstamp. Nice. That we have a couple of breakout continuation, and I'm looking or expecting to have the same possible pattern, right? What is the same possible pattern? Well, then we see that we overall retrace or correct over time, all right? Not overpriced, not that much overpriced, because this is almost a perfect range. This is almost a perfect range, right? So what are we expecting? Maybe slightly more movement to the upside, and then possibly a range. This is what we want to see, range, right? And then maybe a little bit of a decreasing volume, maybe one spike. And when we have the spike, well, then I want to start breaking through the previous highs, all right? So that's what we're expecting right now. Of course, that Bitcoin just maybe can just blow up, but that is just not the way that usually happens. We need to give it a little bit of timing here, right? But I want you guys to start looking at how this volume reacts, right? So basically, we're zooming out, right? Remember, not getting entangled with chunky candles, and we're looking at this kind of spikes, right? So we're kind of like going or outlining that kind of movement that is playing out. And then what happens? Well, we start connecting tops. We start looking for this kind of mountains, right, that we have. These mountains and these valleys, right? So what happened when we start having those valleys? Usually those are bottoming signals, all right? So far, this is going to be much of what we're going to be looking for. Because at this point, what happening here? Remember, guys, what is a divergence? Remember that a divergence, it is your oscillator. By definition, it is your oscillator going one way and your price action going another way. This, because your oscillator is losing the battle, this creates a, what do you guys think? A bearish divergence, right, on your oscillator. Why? Because you're moving downwards. Usually your oscillator is a leading indicator, all right? Or is a reactive indicator that shows usually around volume, and volume is very, very, very important, all right? And then the price action is going the other way around. That means that the price action might be getting exhausted, and then when it needs the most, it's not going to be able to hold it and then retrace harder. All right. So that is a divergence. So what's happening in here? Can we maybe call this a divergence, a volume divergence? Well, I'll leave that to your imagination, but I actually use this kind of divergences to start predicting retracements, right? Or breakouts. So one of the breakouts that I'm looking for, it is, for example, in this case, we're having on outstanding volume. All right, let me just put it in here. Outstanding volume, but still no reaction. We are very close, but we are not there yet. I need to start seeing more volume, right? This kind of volume heights, this kind of volume heights, right? And piercing through to go for maybe a retracement continuation to the upside. In this case, since we're having very dramatic breakouts, right? And this is because we already have at least 1, 2, 3 movement within the channel. 1, 2, 3, 4, 5, right? That's where we start looking for possible breakouts. So once again, we need to be patient in here. Let me introduce you to another kind of volume that we use. This is the VRVP or VPVR, depending on how you use it, right? Also, we have our own proprietary VPVR, which is this one in here. I'll show you in the next class how to use it and how to add it. But for now, I want to show you that there's 2 ways to use the VPVR. One, if you have the paid indicator. Another one that if you have the free, not paid indicator, the paid trading view package. And another one that if you have the free trading view package. Right here, usually you're going to have, oh, where is it? It's usually in here. Yeah, perfect. There you go. Usually here you're going to have the long position, right? And then if you scroll all the way down, you'll see the fixed range volume profile. This is free and you can add it at any point, all right? You just click it. And one tip is that you click to your left and then you extend it. It doesn't really matter how low, how high you're going to be putting it because it is just a measurement of time, all right? So basically you're overlaying between this first candle and this last candle, all right? What is it doing and what is it painting in here? This is showing you by time and price action zone how volume was at. So it's telling me that at this area we have a spike of volume throughout this price action zone. So somewhere around 104 we have spikes of volume playing out, right? So let's use it the same way that we use down below. Something interesting about this one, it is that if each instance of this, it is a standalone and will variate. Look at that, how it variates, right? Depending on the price that you analyzed. Usually I suggest if you are analyzing, for example, this one, I suggest going back in time to find another area that has the same amount of volume and then using that as a reference like this, all right? That way I'm not only using the latest data, but I'm also using the last part of the data. So basically backup data, what happened in the past, right? So another part, it is also adding just the area that you're analyzing. All right, and you see that the volume spikes in here are much more pronounced other than in here that they're much less pronounced, right? So look at how in this case, these 3, let's call them mountains or shelves, right? They are very well defined. Well, in here, we actually have almost the exact same 3 shelves, right? But they have some more spikes. In one of those spikes, it is much, much bigger. So what are we doing in there? Well, then this is telling me that right here, compare or only on this area, we have similar volume throughout these zones. I'm going to be looking for the peak of those mountains and use them as supports. I also going to be looking the dip, right? Or the depth in here, the lowest part of those areas, and also using them as support or as resistance. All right. So those are the two kind of volume indicators that we're going to be looking at, especially the VPVR. It's a very nice indicator that we can start using. It's going to provide us with volumetric support and resistances, right? There's another one that you can go and add it. It is under indicators. It should be on, I think, either technical financial. Don't quite remember. Let me find it. And it's the fixed profile, fixed volume profile, or something like that. Let me find it. Visible range volume profile. There it is. So it is a visible range volume profile. Usually you get that when you have a paid trading view. Sorry for that. And let's take a look at this. This is basically a zoom in, zoom out type of indicator. Basically, it auto adjusts based on the last candle that you have on your perspective here and the first candle that you have right here on your view. So what are we going to be using it or adjusting it? Basically zooming in, right? Or zooming out. See how when I zoomed out, it changed. So we need to give it a little bit of space, right? So I can actually just change what I'm looking for by just limiting the amount of candles that I have in here. And now you're gonna be looking for the same exact same 3 or 4 volumetric spikes. So basically that is how we're gonna be looking for this. So don't worry, this is kind of like a little bit nicer in the way that we could be just having it right there as is. So we don't need to change it. Just make sure that you understand that the more you zoom out, you're adding more candles onto the calculation setup. And therefore, you're going to have some shaded zones and some brighted zones, right? So those bright zones are basically the most important recent area that we're looking for. And then the shaded zones are more in the past zones that we could be having. Again, we're going to be using them as before. We're going to be having horizontals that indicates the tops, right, of the tips of those mountains and also the bottoms of those mountains. So let me clear this up. There's one more thing that you have noticed and I have not yet talked about, which is the POC or point of control, right? So right here, this is usually where we have the strongest area for the volume spike. All right, let me Control C this and let me double click in here so we can see how it reacts. So let's go to style and you see that I have my POC, point of control, right here. Another important thing that you might be getting to here, it is your input, your row size, basically how many bars we have, right, per zone. So at this point, what we want to look for oh, sorry, this is just driving me crazy. Sound of Discord just going off and off and off. One moment. It's just the time of the day that everybody started asking questions on the Discord. Sorry. So basically, there we go. We're going to be using this as shelf. Something that you might be not related to. It is the row side. Basically, how many bars we're going to have. Let me give you an example. Let's do 20 here. And let's click away. And then you see that now we have 20 bars per interest zone. All right. So what does that mean, or how can I read it? Usually this gives you chunkier zones, and we're going to be applying this concept in the future in tomorrow's advanced class. But for now, I usually try to get something that my brain relates as support and resistances, right? So for example, just how I learned to use it is just kind of like a go crazy in the row sides, somewhere between 200 and 2000. Right, that's how I learned it, just to have as much definition as I can. But I've came to notice that sometimes this is not on my best interest. And this is because I have too granular things that sometimes distracts me, right, from the actual movement. So I start getting a little bit more noise. So my suggestion, as always, it is find a number. And by the way, based on the market cap and the volume that you have in here, you will have to adjust this to look the same or something that, so what I'm trying to say is 200 is not going to be a fixed number for everything. I mean, you can use it, but you'll see difference in sizes, all right? So what I usually suggest is going somewhere around, I don't know, I think 70 will be all right for me. Something that makes sense with me, there we go, that doesn't give me that much of a noise, but also give me important areas or bigger shapes, right? So I can look at this peak, 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 so on and so forth. And I also need to understand that those peaks are zones, right? So those peaks are zones. So by having them a little bit more chunky, that for myself tells me or lets me understand that I have some support areas that maybe can overextend slightly bit, right? Other than having so much of a smoother transition, right? Like 2000, and let's go for 2000, just so you guys see the difference. There we go. So doesn't really work for me that well, right? So again, I usually leave it at 200 because that is kind of like an all habit, right? And the difference between this one and the one that you add right here from this drop-down menu, it is just basically, this drop-down menu right here, fixed range folded profile, it is where your BPVR is placed, right? The other one is to the right, this one is to the left, right? As you can see, basically they are almost exactly the same, right? So you can start looking for those areas of interest. Same same POC, right? Same spikes, right? Same zones. There we go. And same valleys. So if you're planning just to upgrade for this indicator, don't do it. It's not worth it because you already have it for free. But if you're planning to upgrade because you can add more indicators, you can have a set of a plan, well then look it out. My suggestion will be upgrade on TradingView as you need it, right? They let you do some prorated upgrades, so that is fantastic. And as you may need more indicators, well then you can add them. I want to touch on something today, since it's gonna be a little bit of a smaller and shorter class, right? Look at how many indicators I have, all right? I usually, or recently with quotations, I've came to make pieces or make peace with myself in the amount of indicators that I have to my left. Because before I only had strictly what I needed, all right, by segment. That means that I still do different setups in here that have different set of indicators, right? Why do I have that many right now? Because I've dedicated a huge part of my trading career to teaching indicators, right? So it's much more easier for me just to have them configured so I can turn them on, turn them off. And then if you guys have some questions, I have it in hand and I have the settings and the explanation and the means to show you how it works, right? But I would say do not go as messy as me, right? Try to stay away from adding that many indicators to your left and just use the ones that make sense for you. All right, guys. So thank you so much for watching today. So sorry that it had to be a little bit of a low or shorter class. I do have something that I need to attend to. And also, I don't want to overwork you guys because tomorrow we're going to be going in depth in these indicators and we're going to be using them much professionally. Remember, we are at the advanced trading zone and we're going to be diving deep with this kind of indicators, right? So guys, thank you so much for joining. And you know what I didn't do? I didn't shout you out, guys. So we have JR in the house. We have Alexander G, Wick's wife. We also have Lawson Crypto. We have Alexandra. We have Andrea. What's up, Andrea? Andrea or Andrea? Let me know. We have, who else we have in here? We have Frank the Tank, Dejan. What's up? We have Retro Mike. We also have week 589. What is up, bro? Long time no see. Great to have you. Jay Violet in the house. Welcome, welcome. Retro Mike in the house. Kid Digity, what is up? Welcome. And also we have, I think that's it, right? Denise. We have Denise or Denise. Let me know. How do I pronounce that? An average crypto Joe. So guys, thank you so much for joining. Tomorrow we're gonna be having the space to do some requests on setups. So somebody asked me for Aave. So sorry that I did not have enough time today, but tomorrow I promise you that we will, because tomorrow we're gonna be going to the advanced section and also the practicing section. All right, guys, again, thank you so much for joining, and as always, see you guys tomorrow.